Hi guys, brand new day. Welcome to this Money Control live stream. You're watching Morning Trade with me, Nandita Khemka. The global cues are looking extremely sanguine this morning with Wall Street clocking a 4-day winning streak. Of course, Asian markets are also in fine fettle, Gift Nifty hinting at a positive start after yesterday's bout of profit booking. But lots of stocks in focus. We'll be talking about the likes of Axis Bank, we'll be talking about pharma stocks, and we'll also be taking up all your stock-related queries with our technical expert on the show. So if you have any queries, send them in to us on our YouTube feed and we will try and take them up. But of course, before we move any further, let's take a look at the top headlines at this hour. Wall Street clocks 4-day winning streak even as US core inflation ticks higher, but the yields have slipped below that 4.2% mark. Investors will watch out for the Fed rate decision later tonight. The central bank is expected to hold rates steady, but commentary on rate action going ahead will be keenly watched out for. Asian markets edge higher ahead of Fed's rate decision. Nikkei is up nearly 1%, and the Gift Nifty, as I mentioned, is hinting at a mildly higher start for the Indian market. We'll have to see whether or not we manage to reclaim that 21,000 mark. US crude drops nearly 4% amid concerns that the US Federal Reserve may not be ready to ease up on interest rates as we've seen core inflation inch up. US consumer prices, as I said, has seen an uptick on a month-on-month basis, and core inflation has also edged up. Brent trades around that $73 a barrel mark, and NYMEX has slipped below that $70 per barrel mark. In fact, prices are now at a 6-month low. November CPI accelerates to 5.5% but comes in below expectations of 5.9% or thereabouts. Food inflation remains elevated at 8.7%. Meanwhile, October IIP hits a 16-month high with nearly 12% growth in the month gone by. Among stocks in focus, sources say Bain Capital will sell about 1.1% equity in Axis Bank via block deal today. Concerns meanwhile rise for LAUS Labs as the company's Visakhapatnam facility receives 5 observations from the US FDA. Well, on that note, let me first bring on board our technical expert for today. Joining me is Kush Bohra, founder of kushbohra.com. Great to have you on the show. Good morning to you, Kush. Given the fact that we saw some bit of profit booking yesterday, do you think it will continue into today's session as well? And secondly, of course, it's the Nifty Bank weekly expiry. What are the levels you'll be watching out for on the Nifty Bank, given the fact that we came off nearly 450 points from the day's high yesterday? Today's weekly expiry, as I mentioned, any strategy that you would want to highlight for our viewers?
So hi Nandita, first up a very good morning to you and all the viewers, and thank you for having me on the show. Well, I've maintained for the last 3 to 4 trading sessions that Nifty and perhaps even Bank Nifty are close to their resistance levels, and they may not be a very profitable trade on the upside. That said, I'm not bearish, I'm super bullish. It's just that the markets have gone into an overheated territory, so we could see some sort of a pullback. Now this is a liquidity driven rally. Let's not forget the FIIs have come back after a while, and hence we're not seeing any kind of sharp cuts, and perhaps we may have to contend with 100 or a 200 point downtick as we saw yesterday. So I think overall the setup is positive. However, even after the 100 point dip that we saw on Nifty, about 90 point dip that we saw on Nifty, and 200 points on Bank Nifty, I still think that the risk reward ratio is not favorable. One, from a technical standpoint, two, from the perspective that 21,000 on the Nifty has a massive call base. So perhaps 21,100 is the near term stiff resistance for the Nifty. So I'll wait for a few more dips to come in before I go long on the Nifty. Bank Nifty, however, I'm a little more bullish. We could see levels of 47,400 on this one. On the downside, 46,600 is a support zone. So closer to the support zones, Nifty and Bank Nifty both turn into a great buy. It's just that here the risk reward ratio is not so favorable.
All right, risk reward ratio not so favorable. But on the Nifty Bank, any strategies that you would be suggesting, given the fact that it's a weekly expiry?
So, when I look at the setup, the 47,000 put has a very strong base. So that is suggesting that, any kind of dip that we see towards that, perhaps will be bought into. So my idea would be to buy, but I will wait because, more often than not, we've seen that the expiry is near, those key 47,000, 47,500 kind of, round figure levels. So if the Nifty does come a little below 47,000 is when I would go ahead and rather the Bank Nifty, if it comes below the 47,000 mark, I will go ahead and buy, but not at the beginning, because if there's a heavy call writing that comes in, again around at that level, then we are seeing a sell straddle that comes into play, and that could perhaps be a little detrimental for option buyers today, being the expiry. So I'll wait. Any dip below the 47,000 level will be a buying opportunity.
All right, below the 47,000 level will be a buying opportunity in the Nifty Bank index. With that, hold that thought, Kush, we'll come back and talk about specific stocks as well. But let me also bring on board, Purvi Shah, who's the Deputy Vice President, Fundamental Research and Pharma Analyst at Kotak Securities, joining in this morning. Great to have you on the show, Purvi. Hope you're doing well. Pharma giants, they have once again been plagued by regulatory concerns. We had Dr. Reddys, Cipla, and a whole host of other companies that have received, US FDA Form 483. For particularly, when you look at Dr. Reddys, for its Bachupalli unit, it is a key unit. It produces somewhere around 4 out of 10 of its top drugs at this facility, right? How much of a setback would this be for the drug makers' US revenues? And do you think the observations are severe enough for the drug maker to actually attract a warning letter from the US FDA?
So as far as Dr. Reddys is concerned, at the moment, we do not see much of an, the observations affecting the stock at the moment. We feel that, as in going forward, how does it, we've not seen the observations. So I would say it's not that severe at the moment, it looks like. And the reaction, of course, was a little more. That's basically because, whenever FDA comes in and there's the observations come in, there is always a, fear that we don't know which direction it's going to head into. So that's why we feel that DRL has already seen that correction. And, apart from their existing products, we don't see too much of traction coming in. So that's why we feel that the generic Revlimid impact on the earnings is much higher. So we feel that it's all priced in the current price, and we have a reduced rating on the stock only because we feel it's factored in.
All right, priced in, these regulatory concerns, obviously Revlimid has a, bigger impact on earnings. But let's talk about Cipla as well.
Yes.
2 of its units, Purvi, are under US FDA lens, right? Goa as well as Pithampur. Do you think for Pithampur at least there is a risk of an import alert? And if that happens, how much of a setback would it be for, future earnings growth for this fiscal and the next fiscal as well?
Yes, so we expect that, the impact will be in range of 5 to 8% because we've said in a couple of our reports that, they are de-risking their key molecules from Pithampur to US side. So that's Advair also has been de-risked. So we feel that even if an import alert comes in, it wouldn't be more than 5 to 8% impact on the earnings. Before that, also there's a step of, so the warning letter, of course, has come in. So we'll just wait. So at the moment, we feel that one can always, switch from Cipla at least 25% or 50% of their position to some other stocks like Sun Pharma, where it is a top in the sector at the moment.
All right, that's the view on Cipla. But what about LAUS Labs? It has received the Form 483 from US FDA. With 5 observations for its Vizag unit. Any thoughts on how much of an impact this would have on future approvals?
So whenever there's a Form 483, with observations, there's not immediate impact or delay in the approvals, honestly. What happens is, what is the kind of remediation process or remediation updates that you give back to the FDA, and are they satisfied or not? And there's a process before which the delay, begins, or the approvals are stuck. So at the moment, we don't see that affecting LAUS, but what we see is that in LAUS that they are trying to get into a lot of new verticals, which are yet to start reflecting in the numbers. And at the moment, there's a lot of expectation from the CDMO business of the company. So we feel that also is trading at a very higher multiple compared to its peers. So we have a, sell rating on the stock because of the valuation.
Right. Last question really. Do you think it's time to focus for retail investors? Do you think it's time to focus more on domestic pharma companies? Because, these US FDA issues seem to have an impact on the stock prices as well, right? We saw a knee-jerk reaction on Cipla, as I mentioned. We saw a knee-jerk reaction on Dr. Reddys as well. But, do you think for now it's time to shift focus to the likes of Mankind Pharma, which has a very strong a stronghold in the domestic market? What would your thoughts be on that front?
I like to agree with you, Nandita. So we our strategy would be to look at companies who have heavy dependence or higher dependence on domestic and emerging markets and ROW markets, and followed by that, the a 10 to 20% kind of exposure towards US business is a good combination to have. So Sun Pharma, Mankind, these are the players who have. Mankind, of course, is a 97% domestic business. So what we're saying is Sun and Mankind look good. The other thing that I'll just like to leave it for the investors to think on is that hospitals is a segment that we have been much bullish on compared to the pharma manufacturing. So I understand the valuation there also is a little stretched because of the sharp run up that we have seen in the hospital. But if someone wants to look at a longer term horizon, one can stay invested in hospitals, followed by pharmaceuticals and then tech.
All right, that's the view on the entire pharma space. With that, Purvi, it's always a pleasure having you on the show. Thanks a lot for joining in this morning and sharing your thoughts with us.
Thank you, Nandita, for having me, and have a great day ahead.
Thank you. Same to you. With that, let's go back to Kush. Kush, I want to get in your thoughts on an Axis Bank. There is a news flow around this stock. It's likely to see a block deal by, I think Bain Capital is looking to sell stake. According to sources, of course, 1.1% equity likely to exchange hands, and floor price has been set at 1,109 rupees per share, which is at a nearly 2% discount to current price. If you look at the stock, Axis particularly, it has outperformed its other peers like HDFC Bank and ICICI Bank on a YTD basis at least. One of the stocks in the banking pack that has done well. So here on, what should one really do with an Axis Bank? Do you think it will continue to outperform its peers, and this is a better bet vis-a-vis the other two?
So, Nandita, even before HDFC and ICICI started moving, Axis did, show that kind of strength and momentum in the private space, as you said, and was our, topic in our advisory service, as well from the private space. Now, a couple of things will play out. Because of the sharp momentum that we've already seen, the stock has already seen consolidating, for the last 4 to 5 sessions, and could continue to do so. However, if the block comes in, the selling pressure does come in, that just might turn out to be an interesting buying opportunity. But my only concern is that the momentum from here on will shift to the likes of HDFC and ICICI. So while Axis will do well, I think it's time to shift to HDFC and ICICI, because they haven't performed for a while and have now started to show traction. So on the whole, Axis is positive, but from a momentum play perspective, I would shift focus to HDFC and ICICI now.
All right, that's the view on Axis. But I think on my feed, on the YouTube feed, I saw a query on Bandhan Bank. Now, Nuvama has flagged off that Canara Bank may replace Bandhan Bank on the Nifty Bank Index, right? And Siddharth Jain has a query on this particular bank. It's really not done all that well, Bandhan Bank. In the last 1 month, it has managed to clock in gains. But if you look at a 6-month basis, it has lost somewhere around 10% or thereabouts. Do you think this is one of the weaker banks on the charts?
For sure. If I, in fact, just, take it back, take you back to history, I think August 18th is where the stock made its high. And ever since, the stock's only made lower highs, right? It does not bode well for a stock, if you've not made any kind of, a meaningful move in the last 7 to 8 years. So it's not really been on our radar. In fact, it's only been on a radar to sell and perhaps have a hedged position against some of the long positions. And what I also like is the fact that, Canara Bank, which again, from the PSU space after SBI is, one of our picks, as you said, is most likely to replace Bandhan Bank. That's a good sign. The stock's not done, too much. I don't think this should be a part of anyone's portfolio, at least on the long side. So Bandhan Bank is a very clear exit and a very clear avoid. Canara Bank, for all the right reasons and all the right moves that it's made, it also, looks good on the charts and, should be bought into, but perhaps on declines, given that, there's a big run up that's coming in most of the banking counters.
Okay, let's talk about an ITC now. Yesterday, they had an analyst meet and they have, laid out the strategy to boost their FMCG business, right? ITC, if you look at the brokerage views, Jefferies has maintained a buy rating target price at 425, 452, I beg your pardon. And it believes that, rural demand has really bottomed out and FMCG business is well poised to capture the upturn. The management is also hoping for a stable tax regime when it comes to cigarettes. So that business is also expected to do remain fairly steady. CLSA also has a outperform rating. Target here is a little higher at 494 rupees per share. CLSA believes that the cigarette growth is likely to consolidate in the near term on a high base. If you look at Morgan Stanley, that has also maintained an overweight rating and target price at 493. But ITC, ever since it clocked that 400 rupee mark, it has been in a sideways trend, right? Even now, 450 is where it's stuck at. Do you see some bit of movement from here towards that 480, 490 zone anytime soon?
Looks a little unlikely, and I'll give you a couple of reasons for that. 499.75, almost 500 was the high that the stock hit, somewhere, end of July. Now, if I just ignore those couple of days of, sharp up move, the stock's actually been in a very narrow trend of, narrow band rather, 475 to about, 430, 440 kind of levels. Not seeing a lot of traction. The street was hoping for a lot more from the, analyst meet and, the announcements, and even that has sort of for not disappointed. Now, while the stocks turned mildly, in an uptrend, I think the near-term resistance levels hold. So, a couple of levels, 465 and then 475. These are selling points for, ITC. So, we may not see a very big momentum. But then again, how we see ITC is that, when you make a portfolio, you've got to make it for all seasons. And ITC from that perspective will at least give you capital protection and a gradual and a steady up move. So not from a trading perspective as much, but from an investment perspective, ITC could well be a part of your portfolio. It probably be a little sluggish, but beyond 475, you could see some momentum. So 475, 500 could be, medium-term targets for ITC.
All right, those are the levels to watch out for on ITC from a medium-term perspective. But Z staged a good comeback yesterday, and we have a query coming in from K. Naga on this stock. Given the fact that the stock is fairly volatile, would you advise investors to trade into this particular counter?
Well, no, we've seen Z move quite a lot in the last, couple of weeks' time. Volumes also picked up. But, my views been that, there's a lot going around, there's a lot of story going around the stock. It's been very volatile. So at best, if someone wants to participate in this move, you could do it with a very small volume. But we actually maintained kind of an avoid, a rating on this for a very simple reason. Right now we've got a lot of choices, a lot of clean stories and a lot of, trending stocks. A lot of them doing well. So why would you want to be in a stock which is so volatile and has a lot of uncertainty going around it? Just from that perspective, we're not too big on Z right now. But as I said, the momentum's strong. If someone wants to play, from a very small position perspective, then 305 and 320 are the levels that that I'll look for. And on the downside, 270 is where there's a strong support zone. So within this band, the stock could, perhaps give you some sort of a trading momentum for the coming days. But as I said, there's a lot going around it, so just be a little watchful.
All right, be a little cautious when it comes to Z Entertainment. But let's talk about PI Industries. Yesterday, we saw a 10% downtick coming in. We have a query also coming in from Divya. Wants to know your thoughts. Do you think the trend looks on the negative side now? Has there been a trend reversal? But on the other hand, it has been clocking in losses, I think, on a monthly basis as well as 6-monthly basis, and just about 2% up on a YTD basis. Do you think there's more downside here? How should someone really navigate this bout of sell-off?
So, I think this news sort of came about in the last hour or so, of trade yesterday. And I don't think there was a very clear clarification also that the management got a chance to, provide as to, whether the news circulating around it are confirmed or not. So, I'd wait and watch for any kind of confirmation from the management. From a technical perspective, the stock did close below its 200-day moving average. Now, while that might sound like a big negative, and it is, the saving grace here is that the near-term low that the stock had made was close to about 3,300, and that is still intact. So I will wait and watch if that level is held and a clarification comes around, then there could be a bit of a bounce that you could see in the stock. But for now, it's an avoid. Let the stock settle. Let the clarification come in, and let the price actions show you that the bottom is in place, and then perhaps you could look for an uptrade, because let's not forget, before this sharp down move yesterday, the stock has actually done rather well, and it was about to cross its resistance levels. So I'll wait and watch. Any kind of support levels might just turn out to be a quick trading opportunity, given that the stock is also approaching oversold territories.
All right, wait for the stock to really settle down before looking at it. Hope that answers your query. But a couple of queries coming in on the OMC pack. KRK Rao wants to know your thoughts on IOC BPHP. But of course, we know that some of these stocks have been extending losses in trade. But this morning we have positive news flow. When it comes to crude at 6-month lows, and $73 is where Brent crude is at. So do you think that there are chances of a reversal in today's session and the next few sessions, given the fact that crude is emerging as a comforting factor now?
That is a likelihood for sure. And what is also comforting is the fact that these stocks had seen a very sharp move, and all of them had gone into an overheated territory where it just became a little unattractive for traders to get in. Now, if you see for the last 3 to 4 sessions, some of them have cooled off, some a little more than others. But this is actually now placed these stocks on a very strong footing. And now the fact that the crude is actually cooling off a little further will provide more impetus. So from a technical standpoint and from a fundamental standpoint, there is definitely a bounce, that these stocks could see again. One of the stocks that I see as the strongest in the pack is IOC. The dip was also not as sharp as the other two names, HP and BPC. So I will hold, or rather I will actually accumulate IOC even at current levels. Now my stop loss would be a little deep, close to about 105 levels, and the targets that we're looking at on the upside will be 124 and then 130. So IOC, given that the dip was also not too sharp, was being bought into, I think it's on a strong footing. So that's the one stock that I'll have on my radar.
All right, that's the view then. But we also have a query on Gulf Oil. This one is coming in from Uru Parvai. Wants to know your thoughts on this particular stock. How should one trade into these counters now, Gulf Oil and and the likes?
So see, Gulf Oil particularly has not really been a trader favorite counter, right? I mean, there is momentum in this stock when there's news around it, and after that it just fizzles out, and that's what we've been seeing. The stock closed below its 20-day moving average. The momentum indicators are also a little sluggish on this one, and the volumes are also tapering off. So I would suggest avoid Gulf Oil. Not a big money spinner, at least when it comes to trading. So for me, Gulf Oil for now remains an avoid. But if someone does have a position, then the key levels to watch out for are 625 on the downside, and if the stock does turn around, then 685 and 705 would be the levels that one can watch for.
All right, hope that answers your query. But the next query, a couple of queries coming in on the railway stocks. Sagar wants to know your thoughts on RVNL and IRFC. And Rakesh also wants to know your thoughts on IRFC. In fact, he holds IRFC 850 shares, and he wants to know whether he should add more at current levels. How's the railway pack looking like right now?
Oh, fabulous. In fact, you pick any name, much like the power sector, anything that you touched was gold dust, right? So similar story playing out in the railway pack. Some of these names had consolidated for a long time, and then now are turning around the corner and giving a breakout. So I think these are a good, this is a good time to accumulate some of them. The momentum's back and the volumes have also picked up, and they've got the political stability angle also going for them. So I think IRFC, from here on, looks like a good buy. Had a resistance close to 70, 950, 80 odd levels, and that's been taken out convincingly. So I think this momentum could continue. Further addition is also warranted, not an issue. 88 is my first target, and then 91, perhaps even 92 is where you could place your second target. On the downside, very strong support zone at 79. So these are the levels that I could suggest on IRFC. As far as RVNL goes, similar structure, very similar structure. 174 was a resistance zone. Volume pickup, momentum indicator spike. So this stock could also jump up immediately. You could see about 188 and then about 200 kind of levels on this one. And on the downside, 167 is a tight stop loss that I would place. So all in all, the entire pack's doing well. So not a bad idea to make a fresh entry as well.
All right, not a bad idea to make a fresh entry. Hope that answers your query. But just about last couple of queries now. Funny PG wants to know your thoughts on Adani Power. In fact, he has bought them at 573. Wants to know what are your thoughts. Should he hold on or should he look to exit or book partial, losses? If he's making somewhere around 10% loss there. And we also have a query on Suzlon, so might as well take that up as well. Praetorian wants to know how Suzlon is looking up on the charts right now.
See, from the Adani stable, two stocks that have always been on our radar have been Adani Power and Adani Ports. Now, because of the recent, news flow, the stocks have actually shot up quite sharply. And I think the gentleman here got stuck on, the higher side of the trade. However, given the entire setup, I would suggest, hold on to this one. I don't think there's a need to, book losses unless it's a, very short-term trade and liquidity is an issue. I would suggest hold on to this one. Because the run-up was so sharp, there was a profit booking also expected to come in, and that's what we are seeing. Once this entire phase stabilizes, the stock will again resume its uptrend. And I think the buying level, which is 573, about 575, these are the levels that the stock could touch again, and then perhaps move towards 600 as well. Could take some time, but I don't think he should be in a hurry to book losses on this one. However, since it's a short-term trade, I'm assuming you should always have a stop loss, and a strong one here comes in at around 495 levels. So if that gets triggered, then it's perhaps to book out and then look at a re-entry. On the other stock, which is Suzlon, very sharp up move, consolidation phase on, momentum indicator suggesting downside. I will wait and watch for this one. For me, 40 is a threshold to cross. Once that crosses, will I consider buying again? Otherwise, the stock could very well go sideways.
All right, that's the view, and with that we've come to the end of this query segment. But Kush, before I let you go, what are you recommending for our viewers this morning?
I think two things which we've already touched upon. One of them is crude play. Pidilite, has been doing rather well. The stock had underperformed. There was a technical rebound that also came around, and the crude, decline that has also helped, the cause of this stock. Pidilite is on our radar. 2650, 2680 are the near-term levels that we're looking at. 2560 is the resistance, or rather the support zone. Also, the railway theme that we touched upon, one of our picks happens to be from that space, which is Tex Rail. The stock's done well, close above the resistance zone, and the volumes have also seen a sharp pickup in the last 10 to 15 sessions. 161, 164 are the targets that we're looking at. 153 is where I would place my stop loss. And as a standard disclaimer, these are the stocks that we've discussed, with our clients as a part of our advisory service.
All right, two recommendations coming in from Kush, Texmaco Rail and Pidilite. With that, Kush, as usual, pleasure chatting with you. Thanks a lot for taking out time, joining us, and of course, addressing all of your queries as well.
A pleasure.
Well, with that, we've come to the end of this edition of Morning Trade. But let me remind our viewers, two IPOs opening today, DOMS as well as India Shelter. Whether or not you should subscribe to these issues, log on to moneycontrol.com and find out what analysts have to say and what are they recommending. But with that, we've come to the end. Thanks a lot for tuning in from me and the entire team. Stay tuned because coming up next is Opening Bell.